I have started to analyze CPI for during the 2 last years, from 2020 until 2022. I also had 2023. So in 2020, from 2020 to 2021, CPI was not high impact news. So the impact was not as impressive as currently.
Mm-hmm.
So I didn't dig into detail in those. I just you can see you have also access to the database, I think. So you can see that it does not really impact the market. It's often happen after the turn or during the move, but it does not change anything. This one also, so 2021 it's the same. So for the coming presentation, I will focus on 2022,
Okay.
which is where the CPI really impacted. Because before 2022, CPI was just a news like the other one, and the market was more impacted by the NFP or things like this, showing that the economy was growing. And I think I'm talking about CPI now, but what we should focus on is what will be the next high impact news, which will replace the CPI when the CPI will not be as important as now. And the analysis can be done the same.
True.
So if we go to 2022, so we started 2022. We you can see my my mouse, or I don't have a mute on.
Where's your mouse on?
You can see.
Yeah, we can see your mouse.
So we start in January with a pump and a dump on the CPI, and it does the same in February. Then in March, as the number were almost the same than the one we were expected. But it didn't do anything. And then because of the war, I think nothing happened. I mean, in the way analysis during the April and May. Then in June, it was a really high impact news. In July also, and so I will dig in detail for the end of the year, because the beginning I have a look, but I don't think it's very interesting. So I decided to focus on June, July, August, September, October, November, December, and January.
Yeah.
So I don't know if you have a look at my at what I've done. So for each CPI during last year, I've tried to look at the week, the entire week, in order to see if it's always a net trend or not. And I have also analyzed it in different way, because it's not always on Wednesday. So sometimes the day -2 is on February, on Friday. So the way it was to have the 2 days before and the 2 days after the D-Day. We will enter each day. We start from.
So did you have to type this up manually? That's a lot of work.
Yes, it's manual. Yes, it takes some time, but the goal was also to try to find some interesting thing on it. But to be honest, I didn't find something a pattern that I would have loved to, or not yet. I'm still thinking about it.
Can you put the D-1, D-1 version. Yeah.
I think everyone has access to the database.
Yeah. I'm just looking because my 2022 my memory, and I've been able to catch the top like 3 times already, right? Is every time market is moved up. Most of the time market is moved up. Market is rallied into CPI quite a lot of time this year, and every time it's rallied, it's always hammered down. Yeah.
Yeah.
When it's
Yes,
not rallied, that's when you become careful. So we here, if we look at 20, where is it?
you want to see?
No, I'm just gonna see from the bottom, right? Choppy, uptrend. So whenever there's an uptrend, and I don't know what kind of uptrend, but normally if a day or the day before 2 days of uptrend, it gets hammered. So you'll see uptrend, that spike up of CPI gets sold. Uptrend, downtrend.
This work only in September. In fact, you get two. If you look at it, it's what happened in September. I will open it a big giveaway like this. I think. You had a big uptrend like this during all the week before, then beginning of the week, and after that, that's why you take the top. If I will remember during your Q4 trade.
Yeah.
And that was one of my questions for today, so I will ask you later. And then it fall during the whole day and get choppy, and then, if I will remember, we got some help from Powell for the continuation of the fall.
Repeat again. I couldn't understand.
I think we after the choppy day, I think we got some help from Powell for the continuation of the fall on the 15th. I mean, in the newspaper, they say it was because of Powell. But for example, if you look at this one, so it was in February. We got 2 days of uptrend. I call this uptrend, right? And then
I just want to put this in memory, right? Because it doesn't matter. What we're trying to do is create that link in our head, right? Sometimes you can anticipate a lot of things. It's not directly tradable, but these charts are very helpful to associate.
So what was for tonight is to pass all the chart from July up to January, and to try to find a scenario for tomorrow based on those charts and what has happened before.
Yeah. Well, I didn't have my model because otherwise I could have guessed it for tomorrow pretty accurately. Because last week, remember, last
Yes,
CPI,
I remember.
last CPI, I said irrespective of the result, the market will hammer down. Yeah. I don't know if you remember, last CPI I said it doesn't matter what the result is, market will whatever the first rally will be sold. I can guess it. My model can tell me the positioning is so weird. Like after CPI, the market is gonna fall. I can tell based on data. Because the right now market is being held up the way dealers are positioned. So you can check all that. Well, it's not check, but you can guess and calculate and see what the probability is. This week I don't know. I have no idea. So let's have a look at the chart.
Yeah. So let's start so if just to put in context, so the market was kind of ranging between the very low of June, and it was trying to look for direction. So before the event, there is a kind of trend down.
Yeah.
So it's also linked to the holidays and something like this.
So market rallied just before the data came out, and then that got sold.
And you can have it more clear.
Yeah.
So yes, it's right just before it came out, like if it was already known. Then it was put green, but it means bad news. So it was sold.
Right.
And in fact, it came back almost to the exactly the same the start of the initial move. Before.
So what happens? Hold on. So I can tell you right now. Let me look at Nasdaq for what day is tomorrow? Tomorrow is 14, 15, isn't it? So look, so for Nasdaq, okay, let me tell S&P, which is probably somebody everybody follows. Yeah. So VIX right now is 20, right?
Yeah.
20.6. So that's, if you think from an options market, people are buying put, people are buying buying call option. The price. So every option contract, whether put or call, has many element, which is one is time to expiry, the other is risk-free rate if you did finance, the third is volatility. So higher the volatility expected, the premium is higher. Yeah. So right now VIX is at 20.65, which is the 30-day average implied volatility. So what is the market implying? Right now the price of put and call option is implying that the volatility should be around 20ish. That's an index. Yeah. For tomorrow, if you buy an option for tomorrow, actually day after, I don't have a tomorrow expiry. Day after, it's 32, so it's 50% higher. Yeah. Which is why, because tomorrow is CPI. So market, because CPI is such a high vol news impact data, the implied vol is almost 50% higher, and I don't have it for tomorrow. It would probably be much higher than 32. So what happens is, you see that big green bar just before CPI. What happens is, a lot of dealers have sold call options and put options and bought put option call options just prior to the event, or sometime as soon as the event is over, they start to unwind those hedges because they have to hedge. So in Twitter, people talk about, oh, the call option is at 4,000 strike. A lot of people, retail, are trapped, and then the dealers will not let them make money. Most of the dealers are neutral, right? They're delta hedge, they don't care. What happens is, if I buy a call option in market, if I buy a massive number of call option, or all of us buy a lot of call option, prices goes up from 4,000 S&P to 4,100. Whoever the dealers that sold us call option will buy futures, buy S&P to hedge themselves. What happens is, when a CPI event like this happen, they have to hedge because the volatility is so high. And just before the event, they start to slowly unwind those hedges. Yeah. And as they unwind the hedges, the market tends to move up. Same thing with FOMC. Remember on FOMC, last 10 FOMCs we've seen. The first move, irrespective of whoever says whatever Powell says, market always spikes up first. This is because those hedges are going off. Yeah? So FOMC is tradable, even you don't care what Powell is going to say, what it is. Well, except that the news is so bad. In 9 out of 10 times, first move is always up because the hedges are coming off, and then that spike you need to come out and then reassess what's going to happen. I think similar thing is happening here as well, and there's likelihood some similar will happen tomorrow as well.
I didn't notice this move up always. Sometimes it doesn't occur sometimes. So on this move, so first we went up because of sieging. So but then it was high. Then it went down, and it came back to the opening price of the day. just notice this. So to way to enter with JavaScript 3 or something like this. Here and then he gets down and he takes the law of the ones. And just after that, it was the end of the fall, and it starts the famous rally from the summer.
Gotcha.
So just after taking the previous law, he starts rally.
Yeah. Good.
So this was, and I've just noticed this also when I just forgot to mention it. We can say that this is a kind of LDLT. So you put there, up, you come back here, and then you go there.
Yeah.
It was for John. So then in August, oh, so Shopee the day before, then the spike, uptrend, and continuation of the uptrend. So it was during the summer, so it was not really very relevant for me. So the news was good. Before the event, the market rise, and that's one of the moves I noticed is during the European session. Very often the market rise before the event. So that could be maybe a way of trading it. I mean, scalping it before the event. So very often it's the rising move first.
Yeah. We'll look at all of them, right? Because CPI has so many things. One is the hedges unwinding. Another is how far away is the expectation. The other is what actually the number is. So tomorrow is going to be pretty crazy. So I'm not going to trade tomorrow CPI. The only reason is, first, I don't know what my model has no clue at all. Okay, I have not run it. Second, tomorrow there's a new calculation. So there is a change in methodology in how CPI is getting calculated, which means it's going to be. I don't think even people who actually trade only CPI, they probably don't know as well, because there are some people who just trade events, right? Even they have no idea what the expectation is versus what the actual print will be because of change in calculation method.
Yes, that was the point I was planning to talk about later. So if we in August, if we look at the more detail, so it starts in the morning at the European Open. We have a move, a counter move just before the event, then the event, and it doesn't return back, it just continue the trend. So it's not like in the other one where you have another possibility to enter. In this one, you don't have. But you can enter through via scalp one. It's an trend.
Yeah, and then you know the first bar that really went up. Is there a possibility of zooming out this? When does it fill back? Do you know? After 16th, 17th?
I have to go through. Just let me 2 seconds. You can find it here. So it fell back in 16. The top is in 16, in product in 17. So it's like 1 week later. Can you see it or I zoom?
No, that's fine. It's fine. I can kind of see it. It's 10th.
I will zoom.
Yeah. No, it comes back on 22nd August. I was just checking when does this 10th August jump? When does market come back? Because most of the CPI jumps, the price always comes back later on. And how late did it come? It came on 22nd of August. You get what I'm saying?
Yeah, I understand. Oop.
A long time. Okay, this is good.
So it came back, yes. It's you're thinking like a BNB. And it came back on 27, yes. And it closed the candle
Yeah.
on 24th.
Yeah, what we're trying to do is, if I've not, maybe I've not seen so many years, but I've hardly seen any CPI pump or dump that has not come back in like 7-8 days. It always comes back when it's left clean. It always comes back. And there's not a lot of CPI jump in the past, right? As you said, the CPI was not an important data event in like the last 2, 3, 4 years. This year has been very important. 2022 has been really important, but it's very rare for it to like jump out and move and never come back. CPI moves rarely do.
We just closed the one from September. From September at the moment, we are closing it.
Like, but it's taking 3 months, isn't it?
Oh, but we close it maybe every year. But in total, by this CPI.
So just looking at the chart. So, and we'll look through more. Is it a tradable thing? I'm just trying to. If I know nothing else, just going through the chart, how is it? Okay, this one, like this chart right now, if we had sold the pump, we would be killed.
Yeah, that's for sure. I think what can be done is to if we are not cost from the top. I mean, we are not expecting we are not in the topish market. We could try to continue to our bottomish market. I mean, for both way, we can try to follow the trend and to trade the trend. So the trends that work in this one and that work on other one also. You can follow the trend and it will most. For example, in this case, you can try to make some scalp on, and it will work. If we look for another one, which was on the other side, for this one, for example, so that is the one after. If you enter here, there is the spike, then it fall, and then you can try to catch some scalp speed in order to enter the trend, because the trend was on the other side, because the downtrend, so you can try to enter. But if you are at potential bottom or potential top, it might be used in order to take some stop loss or thing like this. And so, in my opinion, that's not a good way of trading it. So, if we look at this one, for example, this one from December, you have the spike. And if you do some scalp run, you will very fast understand that's not a good the good direction. And for tomorrow, I think it will be the same. I mean, we'll have a potential spike, and then we should expect some scalp 3 and not scalp 1. before entering.
I am right now. I don't know. I'm thinking this is what we're gonna see tomorrow.
You mean this? That's a possibility, yes.
But yeah, every time they do different, isn't it? This also had a price spike before the news came out, isn't it?
Yes, an important spike started before the event, and then almost nothing compare. Some of the half of the event is done by the spike before the news. So if you sell here,
Yeah.
you are not so far from the top.
Correct.
And if the news is bad, because we are at the same level than in December, I mean, there are a lot of good expectation on this CPI.
Mhm.
So it might be edge a lot. So we will see. I think this big green candle before the event, just before,
Oh,
and then if it's bad news, we will have the red one. If it's a green one, good news, we will have a small more spike compared to what I already thought.
this happens once a month.
Yeah.
So one of the things we probably can look at, go back and test is if before the news, the last candle before the news is large, yeah, putting an order at the bottom of that candle on the opposite direction. Yeah? So if you think of the green there, first green, yeah, you see the first green, isn't it?
Yeah, I can zoom in. I
Yeah,
mean this one.
yeah, you have a sell order at the bottom
Mm.
with a stop at the top. In this one, price goes away anyway without picking you up, so you can then adjust your order or delete your order. I just want to
Yeah.
test how does it work.
Yeah, it's a good idea.
Because I've last 3 or 4 pages I've seen that candle before.
But it's not
It has
appear
to
all.
be, it has to be decently big, I think, though.
This one.
Yeah, this one.
It's a small candle. So.
This one as well, because you don't know how big the candle is. You need to set your order fast. The green happens at the bottom. You put your red. You see that hammer down,
Mm.
and then you probably get to take some money out, or at least get out at break even here.
I think you lose money on this one because there is no quotation between.
Ah, oh yeah. You're gonna get picked up at the very bottom there.
Yeah.
Okay, too risky.
And that's why it's so choppy because it was neutral news. So you can get out.
Maybe the message here is don't trade CPI.
That's why my message was more try to trade it before or after, but not the news. You know that before there will be a move up. There is a high probability of a move up before the CPI. You can have use it also on this one. And after the CPI, if there is a directional, I mean, if it's positive or negative news, you will have a directional and you can follow the trend. So if we are in a neutral zone, I mean, if we are not at the top or at the bottom, the trend will continue.
Mhm.
And if we are at top or bottom, we have a big chance of reverse in the trend. and so we can try to follow the new trend.
Yeah. Yeah. So yeah, makes sense to me. If you have one or two candle going in the same direction after the thing, then scalp one you buy. Yeah, not all of them will pass anyway, right? Which we know. We already expect not all of them will win, but that's probably a way to play.
For scalp one,
Scalp one, scalp three if it's going down.
but just for scalp one, for example, in this one, you can take your time and you know to enter. You don't have to worry because it's something like 15 minutes per candle, and
Perfect.
you there is a spike, then you have the start of a kind of accumulation. You see here for directional, and then there is a kind of scalp one, and the move start. Then you have other scalp one to enter. And it's often something like this. If you look at the nature, it's also in 15 minutes. You have some time to enter. You have like 1 hour, in fact, to enter in before the. In fact, you should enter the. You should enter the train before the open of New York, and then once New York is open, you have like a big move, and you have another possibility of entering before continuation of the trend. If you look at December, so the one which is more likely for tomorrow. So it starts before, then it continues during almost 1 hour. We start off the top, so we have I think we can call this scalp 2 failure.
Yeah.
And
There is no. Is there a scalp to failure? There is no scalp to failure. The second one probably yes. The in the bottom bar, not the first one.
you mean this?
This one probably yes. So what happens is once you know to me once the first red bar, if there is a candle closes above, like you know the green one is closing above the red, I don't think of it as scalp to failure anymore.
Okay.
It might work, right? Because my the way I do it, I don't consider it as scalp to failure. It's something else. It's like a scalp three. It's a scalp three in a shorter time frame, smaller time frame rather than scalp to failure.
This one I like it as a scalp 3. That was the main thing, but I will not take in this one. I will avoid for start of the fall and the return, and then scalp 3 on this one.
Correct. This one is a better one. So we see a structure change. Yeah. So we see kind of a while if the news is super good, it'll keep on rolling up anyway. If it does not, if it comes back, once a scalp one happens, yeah, we need to try to buy scalp one here, yeah, somewhere. The first green signal bar. This is how I'm thinking, right? Let's say tomorrow this plays out, and I'm trading if my kids allow. You see that first green bar that printed when price came down on the near the blue. Where's your mouse? Yeah.
I will display it on the real chart. It will be easier.
This is okay. This is okay. If you have your mouse.
Give me 2 seconds.
Because you guys know last time we talked about my rule. If there is a massive up move like this, the first scalp one is always a buy. I don't question. Right? It's automatic and I don't think and blah blah. So in this case, I would buy that first green bar. I would buy, and I would be stopped. Yeah.
Yeah.
I all my tests ever, the best trading strategy is buying the first pullback on an uptrend.
So which one will you buy? This one here?
The you see the price went up. I would do a scalp.
Yeah.
I will do a scalp two on the first red as well. Yeah,
Here?
that's a very short trade. I'm out in and out because I would expect a scalp to fail, so I'm just out. But that's not the real trade. The main trade. When the price starts to come back down, remember the old low.
Here?
That low gets spiked down, and then I wait for the first confirmation. So when the long wick starts to appear on the red candle,
This one?
yeah, and there's a shorter time frame probably. Which one? The mouse. I cannot see the mouse yet.
You cannot see my mouse?
No, if you're on real chart, we can't see that either. We can just see your presentation.
Ah!
You have to share the screen versus just the window.
But I share the screen. That's a trend. I will. Okay.
I can explain. You see the.
I will share my screen. But I was sharing my screen. That's strange.
Okay.
Hop là. So we're on the chart.
Okay. Perfect. So here, 5-minute chart, right? So you see the green bars going up and up, yeah. Oh yeah, my scalp too would be. You see that very long wick there? I didn't notice the wick. The very long wick.
This one.
The first one. The first
This
bar.
one.
Yeah, the long wick, very long wick.
Yeah.
In such a massive thrust move, the first long wick, as soon as the candle closes buying, it's worked for me. Like every time I've seen the chart, whether it's in pound sterling or in Nasdaq or in DAX, it's always worked. Yeah, that's your scalp two, first scalp two. Yeah. Okay. The second one I'm talking about is you see the first red candle close there. Yeah. Show me the first red. Yeah. Then price went up. Price went up and came back down. Now under that red candle is my scalp one, isn't it? No, the first red candle. Yeah.
Yeah.
So can you draw a small line there? Perfect. It's a massively fast moving up. First scalp one is always a buy. So I'll wait for a confirmation in I just need one green candle, some kind of long live the trap in 1 minute. Okay? Because I'm looking at 5 minutes, I need a LLTT in 1 minute.
You will have both there.
Yeah, somewhere there I would find I buy. Yeah, because it's such a fast moving chart. I'm not going to go to break even, or I'm not going to take profit with like two bars. Yeah, I will keep this trade. But then in this example, I would have been stopped. Either at break even or at loss. It doesn't matter, right? For me, this is automatic. I don't question. The first pullback on an uptrend is a buy. Wow, well, what happens and all that, I don't think. Now, when it turns around, would I sell the turnaround? I'm just trying to think here, right? Because right now I already have a hindsight of a chart in front of me. I know what happens. But in reality, when we are trading, I don't know what's going to happen. If this happens tomorrow, would I sell? I don't know. I will sell. Honestly, if this chart happens and we are right now at the first red after the LLTT fails, the keep going the first red, the scalp 3, yeah, that would I sell there? I don't think I will sell. Because there's not enough stall. You get my point?
Yes, but the risk is not that much also. I mean, if you go there, you know that you're wrong.
And that's true. That's true. all I'm trying to explain is how I end up thinking when this chart comes, right? Rather than I don't have the benefit of the data, because normally when we see this, it's easier to explain what we'll do. But I'm trying to explain what I would do is scalp 1 is auto buy. I would be stopped, and once I'm stopped, would I go? Would I sell? Maybe not. By the time in my example, by the time I'm stopped, the price would have reached so low, and then the risk reward wouldn't have worked.
Because you might be stopped there.
Right. Yeah. Unless I'm already going into this event with a sell head, right? My plan is telling me to sell. Then I would wait for try to sell at scalp 3. Just using chart price action, I wouldn't sell that.
No, that's clear. That here we can expect a reversal because we know that we are close from a top and from a potential top. So the reversal was quite expected, and that's also the case for tomorrow. So on my case, if I trade, if I can, but it will depend on some other stuff. But we'll more look for scalp 3 than for scalp 1. We'll wait for confirmation of a kind of change in the momentum and the start of a potential downtrend, and then try a scalp 3 in this way. I have the possibility. That's my plan for tomorrow.
Makes sense. Makes sense. It's bloody tough. These days it's so tough to trade, isn't it? I was not here, but the market doesn't move at all. Suddenly moves, goes somewhere, and then again doesn't move at all. I've seen that last 1 week. The market stays in the same place for a long time, and then 15 minutes it moves where it needs to move, and then again stays there for a long time. Okay, this is good, Alex. What else?
What else can be turned on the screen, but then you won't see it. I think. What do you see?
I see trading view, US 500.
Okay, so I disconnect once again. I don't know how to change the.
Yeah, this is good.
Just have one screen, but it doesn't work. I don't know why. So for tomorrow, so as you said, there is a change in the calculation process. So we don't really know how it will be interpreted because we almost already know that it will be lower than expected.
No, I don't know. Who knows? Because it's a change in methodology. I actually don't know because the expected number. Wait, I can probably find out what the expected number is.
I think the expected number is 6.2.
6.2, is it? My God, it's lost. Because the inflation rate went up when the new data was changed. What they normally do is take 2 months of average, I think, if I remember right, the weighting. And now they've moved it to 1 month of weighting.
The expected is 6.2.
6.2, isn't it? Yeah. I don't know where it is. Okay. So 6.2, who knows what it'll be? I have no idea. Oh yeah. Yeah. 6.2, prior read was 6.5. So in the new method, 6.5 is meant to go to 6.2. 6.5, I don't know if 6.5 is a proper read as well.
You understand this like this? When they change the methodology, they adjust the expectation.
Correct. They usually do. I hope they do.
But did you notice that they actualize CPI from last January?
I don't see in my.
Because not the main one, but in the CPI, I don't remember which one it was, but there are two which were actualized with a higher number later. I mean, at the beginning it was lower, so we had the good number which was wanted, and then they actualized in a bigger with a bigger number. So I won't be surprised if tomorrow the good is news. The news is good for us. Right?
I'm just trying to see what was it, because I kind of remember it was. I don't think it went up so much. 5.5 was the official print, and then now that's the new methodology makes that 5.5 into 6.5.
Which one was 5.5? Aren't you missing with core CPI and CPI?
No, not for CPI. Fine, it's okay. It's okay. It's okay. We're digressing. By the time CPI becomes visible to us, the market would have moved like way different, isn't it?
Yes, and we will have to adapt our plan for this move.
So at this point, my plan is, I don't know what will happen, but I'm expecting some kind of a rally first. But because it's already rallied so much, right? I wasn't expecting today to rally already this much, right? I was expecting this, whatever happened today, to happen over today and tomorrow pre-CPI, which already happened. So right now it's hard to say. My expectation is CPI is going to rally first. We see some kind of a stall and then sell that. That was my plan. Oh, now I'm worried my Q1 trade is going to get stopped as well. Never a good thing, right? You keep a trade for that long. So my first stop is at just below my entry, 30 points below my entry, which is at 12,600 is my stop, and we are at 12,500 on Nasdaq. So 100-point spike, and my one of the trade goes out. And then the next stop at the high, because I have 3 open positions, right? Another one is at 12,700 and another one is at 12,740, but I'm going to move all the stops to 12,700 for the top 2, and then the third one I'll keep at 12,600. Giving back open profit is more painful than losing on a trade, you know that.
Right.
Okay, it's fine. We can always re-enter, right? Until that money is ours, it's not ours. It's a paper thing. It's crazy.
The value of today is really impressive.
As an example, I don't know if it's a idiot thing to do or a learning thing for you guys, right? Nasdaq trade is now moved up. Nasdaq trade is now moved up for almost, by the time, if it stops me, it is moved 400 points up. Yeah, I know Q2 last year, DAX moved 800 points to stop me out. And sometimes I like, with the benefit of hindsight, why the hell would you let trade that profitable go? And 400 points is huge, right? Why not trail? That's a very valid question. But you've seen the Q1 trade document, right? The way I manage trade is I have this core position, partial, because my partial, the reason I take partial profit when market is moving in my favor is kind of me not trailing, but it's me taking risk off. When price moves in my favor, risk off. When price moves against you, re-add, right? But you always keep the core position open because quite a lot of time market is quite choppy in the process of moving down. If you keep on trailing, what happens? You get price ends up moving 3,000 point and you're chopped out at 500 and price is gone. And once it starts to move, if I get stopped out and then suddenly price reverses massively, then I'm too late to enter. My risk reward doesn't work. That's how I think. So if you just think from this right now, it feels so bad. Even last time, I think Q4 trade, if you look at it, it's moved back like 600-700 point up. I didn't touch my stop, didn't come near my entry, but it did move up. But then eventually it went down quite a lot. The benefit of hindsight. So CPI, we need to conclude.
Yeah, so you don't have a lot of stuff to say on this, but
Let me summarize.
okay.
My understanding is few things. One is for 2022 CPI was an event. We didn't care, but since inflation is what Fed looks at, that's why we're looking at it. It has a meaningful impact. Number two, without any other information, but all the price actions we've seen, it's mildly random. Yeah, it's mildly random. Not every time it follows the same trend. So it's better not to participate pre-event or at the event. After the event takes place, whatever trend it is, you can scalp once the trend is set. Scalp one or if up, or scalp three if down. Yeah, that works. And because the ranges are so high, even scalp can probably give us, if you're Nasdaq, probably 50-60 points. Yeah, but the risk is probably going to be similar. And then the fourth is for tomorrow, at least for tomorrow. And guys, this you don't have to participate, right? In my head, because I have a Q1 trade. At least my longer model is telling me to be bearish. If there is a spike, I will sell into it. If the price moves down, I will wait for it to come back up and then sell it again, right? Either way, I'm only gonna sell it. So that's my plan for tomorrow. But that's the summary.
For tomorrow, there are three possibilities. There are this one, right?
This is a possibility.
It's go like this. The one from August. Or it also happened in November, where we have a big rise and then it continues. I don't think it will happen, but it's a possibility. And the one from December is a spike and the fall. So in your plan, you have this one, And this one.
And this one, or is another downtrend which came up like half the way.
Yes, like this one. The one from July. Come down, come back, and then we can enter there and continue the fall.
This is my ideal scenario.
But this one occurred close to bottom. We realize this one occurred close to a top, like we are tonight. In my opinion, if there is selling process, everyone will sell for at least few days before maybe move up later. I don't have more on this, but I think later it come back up to there. Do you see my screen? Yes.
Here we can see this. This consolidation. These are the worst kind of. These are the worst kind of price action where in a down move it consolidates flat and then moves down. Then you keep on waiting for scalp 3, proper scalp 3, and never comes, right? Because if you think, if I'm trading this, I won't have an entry. That's very small spike, I wouldn't enter there. Even if I enter, I would be stopped at break even somewhere when the price moves up. There is no proper entry in this. My next entry would be down there near the blue. The very end, do you see that?
Here are the entries that I noticed which are possible.
There it's possible. I mean, on that consolidation, no, it's not possible. These two are possible. If you go back to the last slide.
The last slide is so you have the entry there, but it's not possible to really see it.
Yeah, you cannot, because think about your up and down. There is a very high risk of being chopped, right?
Yep.
Even if you enter on that spike, which you probably will, when the price moves up again, you're probably gonna get out. Yeah? And then there is no proper entry until you get to the blue. You see at the bottom of the blue, when price goes to 3836 at the very end, at the very end.
Yep.
Yeah? And then it comes back and touches the blue. There's a scalp 3.
Yes.
That is a proper entry. The consolidation has no entry. On the down move, probably in a shorter time frame, there is an entry. If there's enough time to react. Yeah, here's my point, right? What I'm trying to tell you is what if I don't have the benefit of hindsight, what is the realistic trade for me? Because when we look at all things that's already happened, it's easy to say, oh, I would enter there and I would enter there, but that's not how life works. Trading, that's not how it works. Yeah, you're anticipating something, and then price says, yes, I agree with you, now enter. And then you need a confirmation how to enter, you need your setup to enter. So a lot of things needs to line up. Yeah? Because for me to react to a market, first market has to react to me. Once market reacts to me, then I go to react, and then I need my trade setup to enter. And here in this down move, the shorter time frame on that move down, otherwise it's so badly low. And then I might have to rethink. Then does that become a scalp trade? It will become a scalp trade. It will not be a long hold. I put my entry so low, I cannot swing that trade anymore. Because for me to swing, my stop has to be like above 4160 at the top. I cannot swing it because if you swing there is a probably 60-70% of chance you're going to get swiped out in either today or tomorrow. So swing meaning like keeping it for a long time. You have to scalp it or trail it or come out in few hours. when you swing, I think that's the thing, right? You need to plan your entry in such a way to really think through where are the big levels, where are the spikes possible, what catalyst has a potential to really put a thrust on that market. You look at all the calculation, and then you look at what if you go wrong, how far away is your wrong point. Are you comfortable? Yes. And then after all that, then you wait for price to come there. If it doesn't come, you ignore the trade. Once it comes, you enter. Once you enter, because your risk is going to be high, like Q1 trade, for example, when we first initiated the trade, the risk was quite high. Yeah, you cannot come out in one day because your risk reward doesn't work. Yeah. While we take a little profit, small profit on partials, we start to accumulate. And then now we've entered. Now, my worry is people look at Q1 trade and then like 2 days ago, they might have thought, oh, okay, this Q1 trade price is bearish, so I should enter. They would be smacked. Now the price is coming back. Because once you miss that window of opportunity very near the top, at least somewhere near, you cannot have your stop like 400, 500 points below. Then your risk reward completely goes bonkers. Same here, right? Manage to catch somewhere at the top, you're good. And then if you enter there where I got my signal, scalp 3 signal at the green, I know for a fact my stop has to be there very high. So there's no way I am gonna sit on this trade for long. You get my point, right? My head, your head should as well. Depending on what trade you take, your thinking has to switch as well, because you're always looking at risk reward. You're looking at the duration of the trade, looking at, if you think of the inefficiency and all that, market comes to fill back, doing all that math while before you enter a trade, and it needs to happen fast. Okay, we are 1 hour past. So, anybody has any question?
I would have a quick question since we are already 1 hour into this presentation. I think that would be quite easy to kind of backtest it, but by any chance, Alex, did you find some confluence between the concept of thrust bar that Hugh spoke about in our last meeting and the CPI spike? I mean, when usually we witness this big move, there is somehow a way to enter at the base of the spike, or there is some kind of actionability in that very spike, or you didn't found it.
Just take an example. This one, for example.
Yeah,
It was in December.
It didn't work.
You know what I mean?
This one didn't work, isn't it? You probably could have scalped like few points, but if you look at the very long green bar, it came, bounced a bit, and then just through.
And I'm not sure we'll enter it because we are not at the bottom of the bar.
okay,
I'm not sure.
I
So there is this one. And the other one, so sometimes you just have a continuation. You don't go back to the bottom of the trend.
it didn't come back.
I mean, not yet.
Yeah.
We didn't comment it, so je crois we don't get back there yet. This one, when you get back, you just
Yeah. So it seems that maybe it doesn't work that much. I don't know.
on this
Because if in this case you would have traded that green bar that was approaching, and then the next bar would have spiked you out.
Yeah. Okay, thank you.
because if you I think on this kind of event, if you, as it's a result of trader entering the market, once they notice there is reverse, they all want to enter and they don't think that you will go back on the same direction. I don't know if I'm clear or not.
One trick I'll tell you, right? When like for tomorrow, expect the price to go down. If it comes back, you know where, like near the base or wherever there, I want to enter there, isn't it? You should always be looking at other charts as well. If S&P or Dow or Russell, if they are exceeding highs, be careful. Don't enter on Nasdaq. Yeah. If assuming market is meant to go down, none of the market will cross their highs. Because somebody who is big dealers, whoever are pushing this market down, will not allow it to go above. They'll protect because they have entered. This is how I think, right? You see that big green red thrust bar? Whoever is positioned for that has a lot of money to move this market like this. Yeah? And if the data confirms, they don't want to lose on that trade. When the price comes up, they will protect that trade. So they will, because chances are they couldn't enter into the trade fully because the market moved so fast, allow it to come back, and then the remaining position they re-enter for the market to go down. But if any of the market does not do that and goes up, you know there is no protection anymore in that market. Okay, any other question?
You just repeat it, just to be sure that I understood.
Okay, so what I'm saying is this: in this chart, you see a red bar when the CPI came, market
Yeah.
hammered down. What for us it implies that somebody big enough, ignore the low liquidity and all that. Somebody big enough expected the CPI result to be bad, so they are positioning. They are going short. They are buying puts, whatever. They are pushing the market down. Yeah.
Yes.
So any big player will not enter one shot into any trade, right? Because their size is too big to enter. What they do, they're testing the market. They push the market down to re-enter again as price moves down. Yeah? In this case, anybody big who sold this, price went down. When price comes up near their entry, if it's a serious player, they will protect that entry. Yeah. They don't want to they don't want to be stopped out. So they will, and they have more trade to put on. So they'll put again another tranche of their trade. I don't know. They might have split the trade into 5 or 10 entries. They will re-enter and protect their entry, the first entry. So, and then when you're watching this price here, you also look at S&P. If this is S&P, you look at Nasdaq, you look at Dow, you look at Russell. None of the other places price should go higher as well. Yeah, because if the market is seriously wanting to go down, you know that base of the thrust bar will be protected.
Okay, I understand. And if if the base of the trust bar is not protected, that means that there are no protection, and so they are ready to move up.
If the high is taken, that means whoever is a big player is not gonna play a long game. Then it can price can then range. Price can keep on moving up because there's more short covering now. All that can happen. But what this means is now there's a very rare chance of, in this example, red, the green goes above the red. There's a very high chance for a new trend to emerge, downward trend to emerge. It's either gonna be an uptrend or it's gonna be a range.
And if we look at it with more candle, we can see that it came back here.
It came back
Maybe
here.
to
You'll
follow
see
some big to low to leave, and then
and its range as well. The idea of this came when I did my BNB test in DAX. Yeah, the reversal of BNB. What I've noticed in DAX, most of the time, right? Nothing happens all the time. If a BNB is complete, so a green bar, a red bar completes it, and there is another green bar that goes again above it. Once the happens 2 times, the BNB like it happens twice. In 70% of the time, the mark that day, the axis is going to range. Huh? Does it need to happen one more time? Usually you have a red, and then usually you have a red, a green, and then the BNB happens and price trends. If you have a green, red, and a green, yeah, doing double BNB, market tends to range most of the time. Say probably today was an outlier. Today we had a green, a red, there was a BNB, and then that BNB bar got, and then market kind of trended. I don't know if we can call this as a trend day. It is a trend day. Most of the cases it ranges. What I'm saying is the protection, there is no protection is all I'm trying to say.
It's clear for me.
Okay, anybody else? And I just want to say, right, when we do this weekly thing, we'll come across a lot of topic which not all of them will need to give us an answer, right? Because sometimes it's a test, like CPI, there is no clear-cut explanation what we can do. There's nothing actionable, or do nothing is also an actionable thing. And the CPI right now, I think is telling, based on price action, is telling us it's a gamble. Okay.
Yes, I totally agree with you. Actually, at the moment, it's gambling, trying to find a good one.
Anybody has anything else to say? So Alex, thank you very much, man. This is a lot of work. You've gone into quite a detailed, written lots of notes, and it's actually quite helpful, right? We looked at so many charts, and there are 5 or 6 ways price moves. At least we can imprint in our head, right? When we start to see it, how to react once price starts to move. What are the potential options we have? So this is very helpful.